All right. Here we are again. It's almost 7:30 and we're waiting for the opening bell. First thing we want to do, want to check our news. How you guys doing this morning? We're in the S&P 500. Looking at the S&P 500 up here in the left-hand corner. Up in the right-hand corner, we got the Dow, the mini Dow over on the futures market. Down in the left-hand corner, we got the Russell 2000, and in the bottom right corner, we got the NASDAQ 100. We're watching all four markets, all four indexes in the futures market here on the futures exchanges. And I'm going to come in here and find our news for us. If we can get it to pull up, come on. News channel is being a little slow today. There we go. Not a lot of news. We talked about this last week. There's the news. And the news is today, 3 a.m., 9 a.m., we've got the consumer inflation expectation, which is not going to do much. And then all the T-bills today. Today's going to be a pretty quiet day. So we'll have to wait and see how excited traders are. There's not a lot of news coming out today. So we'll have to just wait and see how that turns out. So the morning bell starts here in, what have we got? 27 and 3 minutes and 30 seconds. All right, how are you guys doing today? Let's bring this up, just give you a little idea who I am. My name's Lan Turner. I've been an instructor at the Chicago Board of Trade and Chicago Mercantile Exchange, currently teaching at Utah Tech University. So teaching finance at Utah Tech University. So that's what I do. I like to trade. I also have Trade Mentors is my website. So I like to teach trading. But for the most part, I'm just some guy that likes to trade. And so here we are looking at how I like to do it. I'm not here to tell you how you should do it. I'm here to tell you how I like to do it. And if you want to come along with me and watch me trade and see how I like to do it, maybe you can learn a few tips and tricks, then I hope it helps. That's why I'm here. That's why I'm doing it. All right. I've been in this industry for a long time. Almost 30 years. All right, here we go. Get ready. 28. Oh, we got a minute. 1 minute left. So this is all the pre-market stuff. We're in the futures market where the market doesn't actually open and close like the stock market. So the pre-market is a little bit different over here. There's no difference really other than the time change. The pre-market comes from and the opening bell comes from the stock market over in New York. Now we're in Chicago. So in Chicago, we got different exchanges and we have different rules. There's no pattern day trading rules over here. There's no pre-market rules where you can only use limit orders. There's none of that kind of stuff. We can trade. Just trade. There's no rules. It's it's a free for all over here. And this is the way we like it. That's why we like it. The rules over here are so much more relaxed, so much easier to get along with. We don't have all these crazy, ridiculous rules like you have to have $25,000. You have to pay interest if you go short. You have to pay dividends if you go short. You have to do all kinds of stuff. You know, we don't do that over here. We don't do that at all. You can only use limit orders before this certain time. You can only use, limit orders after this certain time. Then the market stops and stops trading, and then it starts trading the next morning. We don't do any of that. These markets trade 23 hours a day, and there's no limit on what type of orders you can use. There's the opening bell, and off they go. Okay, that's the New York session opening up their bell. Again, we're in the futures market, so the market's been trading for us all night long. So if you're in the stock market and you wake up and you look at the stock market, you're like, why did the market have a great big gap? Who's trading it in the middle of the night? Well, we are over here in the futures market. So we can trade it 23 hours a day. We close for 1 hour to do what we call mark to the market over here. Mark to the market is where we do our accounting and adjust everything, making sure everybody's accounts are straight. And then we open the markets back up and away we go. So, and that happens in the afternoon or in the evening. So, not in the morning, not in the middle of the night. So, it opens up back up in the evening, closes in the evening, opens up back up in the evening 1 hour later, and away we go. We start it all over again. All right. So, you're looking at this one here and you're saying, "Hey, Lan, why didn't you go long on the Dow?" Right there. Well, we very well could have. That would have been a nice signal for an entry on the morning bell. Oftentimes, the morning bell's a little too crazy. And if you want to take that morning bell trade, go ahead, do it. You know, nothing wrong with it. We're just sometimes I'm a little bit more conservative, especially when I'm here on YouTube. I want to be careful. I don't want to teach you guys bad habits. And one of the bad habits is to get into is to chase some of these fast running markets. So we want to wait for specific setups and retracements and calculations and um, this is a beginner class. This is not an advanced class. I'm not here to dazzle you with $1 million trading strategies and jumping into the market with 15 contracts right out of the gate. We don't do that here. No, we're very conservative. We're very cautious. We're learning. This is an educational site. And I'm going to help you and teach you the very best I can. What we want to prove in this strategy is I want to show you our goal is to get consistency. All right. It's not to jump in here and we're not gambling. We're not jumping around and trading as fast as we can and try to impress everybody with our magnificent skills and show how big our accounts can be. No. In this class, we're trying to learn how we can get consistency. All right. We just want to get green. Our goal is to make $500 in the day and then stop and walk away. Show consistency, all right? The ability to make a little bit of money every single day and then walk away. The biggest problem most traders have is that they want to jump in every little second. Now, oh, they have a lot of FOMO. Right now, there's traders having a massive amount of FOMO right now. All right. Their fear of missing out. They're missing out on this big run off the morning bell. And so they're all trying to jump in, figure out ways they can take advantage of this, get in there. And some of them are. Some of them are making money and they're doing well. Okay. But look at that down here on the Russell. This Russell's going crazy now, up and down and all over the place. Look at the NASDAQ. Guys are trading the NASDAQ. They're getting slammed up and down. Look at all those topping and bottoming tells. Granted, the S&P is working out really nice, the Dow's working out really nice, but the Nasdaq is not. And the Russell's struggling a little bit right here. So I like to watch this morning bell. Wait and wait, be patient. You got what do we got? 1, 2, 3, 4, 5, 6, 6.5 hours of trading opportunities. There's no reason to jump in on the most volatile, most dis- count destroying time of the day, which is this morning bell in the New York Stock Exchange. What we want to do is we want to wait for a nice trend, and I'm going to teach you the little A B C D pattern. A B C D. Now we're not going to take the A and the B. We're going to take the C and the D. We want to see a trend. Okay, so we want to see a market. We want to see these things calm down. Calm down, boys. All right, calm down. And then we're going to start taking these gentle moves in the market. We want to be a little bit more gentle. It's fun to come and watch the morning bell. We're going to set up our boundaries. We're going to say, well, what did the market go up to at the high in the day during the morning bet session? What did it go to the low? And then that sets up a narrow channel for us to watch. And then when it breaks above these narrow channels, either up or down, we can decide whether the market's going to go bullish or bearish on the day. And then we can have more of an idea of what we can expect throughout the day. And then that gives us our daily bias. But right now, we're just watching the market, wipe out all the guys that went long, wipe out all the guys that went short, take out everybody's stops, take out everybody's limits, and clear the board. Okay, we're just watching the market clear the board right now because that's what it's doing. It's a dangerous time to be trading. There's always every morning that always seems like there's a market that would have been a great one to jump into, and you could have made some nice money on a nice trend like the Dow today and the S&P both doing really nicely to the upside. But there's always seems like the NASDAQ, the Russell, or, in this case, not always these two. Sometimes the Russell's the really good one. But, there's always you got a pretty good chance of picking the right one, but you've also got a pretty good chance of picking the one that's going to rip your wheels off. So we just be careful right now. There's no reason to jump in right now and get all crazy. Let's just wait. Let's just wait. We're conservative traders, all right? We're very conservative. We don't want to take big risks. We don't want to take big losses. Look at how big some of these bars are. From top to bottom of that bar down here, that is a $425 bar. Or if our goal is to make $500 in a day and one price bar is $425 down here on the NASDAQ, that's a little dangerous for us to be jumping into and just, you know, playing the whipsaw in one price bar. So we got to be careful. Up here, little not quite as bad, $160 per price bar on the Dow. This one price bar right here from top to bottom, $255. So yeah, you're like, Lan, I could have made $255 in one price bar. Yes, you could have. What would have been your risk? What would have been your risk? Where would you put your stop? The idea is to put your stop one price bar back behind the entry bar, right? So if you get in, you put one price bar back behind the entry bar, you're going to risk $255 in hopes that that market continues to rally and go higher. Are you willing to do that? If you are, great, do it. I'm not as an example to teach you guys how to be careful and to show consistency and make money. So we want to show consistency. We're not gamblers. All right. This is very much a uh, game of patience, understanding, strategy, and it's a little easier if you just wait for the market to calm down a little bit. I like to come in here and watch the morning bell with you guys because it's fun. Watch these markets go crazy. See if we can't find an opportunity for things to calm down a little bit. And see if we can't get a nice strategy or a nice trend going. We're momentum traders. We're trend traders. All right. We're not gamblers. We're not scalpers. Scalpers are guys that jump in and the market moves 3 points in their favor. They jump right back out and take those 3 points. That's not what we do. All right. If you want to try that, try it in your demo account. That's a good thing to practice so you can see how hard it is and see how difficult that type of trading is. But in this lesson account, I mean, we're in a lesson account here, so I'm going to teach you a lesson how to be careful. Now, here's something I want you to learn in here. Something you can learn is up in the upper left-hand corner, you can see that we've got the S&P 500 and it's coming down. And we got the Dow, which hasn't come down yet. And we got the Russell, which is still going up. And the NASDAQ, which is cascading down like a waterfall. All right, going crazy. So oftentimes what I like to do is I see all these other big markets dropping and this one hasn't dropped yet. This is the lagger. So the reason I like to watch all four markets at the same time is because they generally always trend in the same direction. And they generally always do the same thing. So even if the Dow, let's say we wanted to take a short position on the Dow, we get in right now, and the Dow, let's say it doesn't drop as hard as the NASDAQ or drop as hard as the S&P. Well, the chances of it going up are pretty slim. All right, it's not going to generally go in the totally opposite direction of the other markets that are cascading down. And it's more likely that it's going to go down because the other two have already gone down. So I like to trade the lagger. Now you got the Russell down here who's still, he thinks he's got to still go up while all the other three markets are going down. So the Russell, remember the Russell is the small caps. So the little small cap companies are doing well while the big large cap markets, which make up mostly the S&P, the Dow, and the NASDAQ, they're all starting to fall. So see that Dow, that's a great lesson right here. See how the Russell, or not the Russell, but the NASDAQ and the S&P started falling way earlier than the Dow. Well, that's a good signal for you that the Dow's probably going to fall too. It's going to probably follow. So that's where you take your signal and you take a short position off the Dow. All right, that's what I like to do. We got some guys in here. Let's come in and see John D. It's a trap. My name's Lan Turner, John. 500 is good. Good morning. How much do we trade? Well, we trade. It depends on the market. So we're going to depends on what the risk is. Right now, the risk is pretty big. It's a pretty big risk to be trading right now. So we're going to wait for the market to calm down a little bit, and then it won't be quite so big. Who is Lan? Who is Lan? John D's new here. Glad to have you, John D. Here, I'll tell you who I am. I'll put up my little banner. Who is Lan Turner? Lan Turner is a former instructor at the Chicago Mercantile Exchange and the Board of Trade Education Centers. I did that about 25 years ago. I spent so much time over there teaching, and it was I was a much younger man back then, and that's where I kind of got my career started, was over at the Board of Trade, and then in the Chicago Mercantile Exchange and the education centers. So I was teaching over there at the education centers. I was actually teaching computers. I was teaching how to use the computers, and I would work alongside of all these famous traders. And so it was more of an educational trip for me. I was there to teach, and yes, that's what my job was. I was actually part of the team that was helping to move traders, the guys on the pits, where they would, get down in the pits and play with their fingers, and they would bid, and they were trying to close the pits down. So they brought guys like me in to teach people how to trade on computers. And so we had software that they could trade on. And so that's what I was doing at the Board of Trade. And then, of course, we did lots of seminars and webinars, not webinars, there was no such thing at the time, lots of seminars, lots of live seminars. And with our crew, we would travel all around the country. I'd travel around with people like Jake Bernstein and John Person and Larry Williams, and we'd go to the money shows, and we'd go to the Traders Expo, and we'd do all that kind of stuff. We'd put on our own shows. We'd do all that kind of stuff to teach people how to trade. Of course, it was before we did all this day trading. There wasn't this ability to do this type of day trading back when we were doing that. So we were teaching all these strategies mostly for position trading. We call it position trading nowadays. A lot of people call it swing trading. Swing trading is actually a misnomer. People say, "Oh, are you a swing trader?" And then when they say that, they're referencing what we call position trading, which is going out and taking a position and holding it for long periods of time, like weeks or months. That's a position trade. That's not a swing trade. A swing trade is when you buy every time you get a buy signal and sell every time you get a sell signal. So you go long and short, long and short, long and short. Now, of course, you can swing trade on daily charts and go a long time and take long positions and short, but you can swing trade. You can swing trade on a 1 minute chart. That's what we're doing here. We're going to swing trade. We take longs and shorts, longs and shorts, longs and shorts. That's swing trading. So swing trading is just a process of taking longs and shorts. It doesn't matter the time frame. Nowadays, you get all these kids out on the YouTube, and they're like, "Oh, I'm a swing trader." Well, swing trader to them means that they're taking long-term positions, multi-day, multi-week, multi-month positions in the stock market. Uh, I don't know where that came from. That's totally not how we used to. 30 years ago, that's not what we called it. So I don't know where they kind of got that. I think somebody just kind of made it up once, and it kind of stuck. I don't know. It's not. It's not a real thing. Swing trading can be done on any time frame. You can swing trade whatever time frame you want. Buy long, go long, short, long, short, long, short, long, short. That's swing trading. If you want to take a position, we call it position trading, where you take a position and you stick with it for days, weeks, or months. That's a position trade. Okay, we're momentum traders in here. Okay, so here's a nice signal right here. See this? We could come in and we could trade this right now. We could grab a long position here in anticipation of a rise of price. It's also a short position because the market could come and cascade back down. So we could have an ABC going up. So see this, A, B, C, and we could take the long position off those two green bars, the little green bars going up, and anticipate a continuation of the rise in price. But it's also a short position, okay? We could also see this thing as a short position. So we come in here and we see could be A, B, C, and we could take this thing back down. The problem is that we're coming into a neutral zone on the Fibonacci scale, right? So this market's made a nice rally. So we're not in either an overbought or an oversold region. We're back down right dead center of the Fibonacci sweet spot. So in the Fibonacci sweet spot, where this thing's went from low to high, it's pulled back, it's into the sweet spot, it's now neutral. So oftentimes what happens when a market comes in here and goes neutral is that it kind of wanders sideways a little bit. And this is oftentimes where people get their wheels ripped off, because they come in and they start jumping in right here at this point in anticipation of a continuation of the trend, but the trend doesn't continue. Now, we don't have quite so much of that here in the morning session. The morning session, there's a lot more excitement, there's a lot more movement. So the trends or these breakouts generally work a little bit better in the morning session. If you try to do this in the afternoon session, that's where you're going to get a lot of sideways markets. They make the nice move, and then the market just kind of dies and goes sideways for a while. So you have to be very careful trying to take continuations in the afternoon session. You're more likely to be able to get something like that in the morning session. So we're just going to still watch and see, because this is actually sell strategy right here, because it went red after two green bars. So we had the reflection. This would be an A, B, C, D pattern, and we'll see if this holds, but it doesn't look like it's. So there's your pattern right there. And you notice that the NASDAQ is still cascading down like a waterfall. So that thing is dumping like crazy. So that means that we'll probably see the Dow will probably continue down. Again, it's one of those situations where everything is falling except for this last market. This Dow is not falling like everything else. So we're going to expect that the Dow is going to be the one to fall too. And if it falls, then great, we could take a short position on that. The chances of the Dow turning and starting to rally right now, and this is what you want to do, put the probabilities in your favor, right? The chances of the Dow turning and rallying and taking off while all the rest of the markets are falling is pretty slim. Now, it may not fall as much as they do. It might not fall, but it's not going to take off and go to the moon if all the rest are falling. Okay, so that's, at least you're not taking as big a risk of this market, taking off and going to the moon. Now, it might be the leader. It might turn around and change its mind and decide, hey, now I want to be the first one to go long, and all the others turn and follow. That happens sometimes too. But we're being conservative right now. I haven't taken a trade yet. We're just waiting. We'll just wait and see what's going to happen here. Okay. So we're getting a little pullback here. That's a little flag is what we call that. That's when the market, we call it flagging. The market is flagging. It's not a very nice one. Usually we like to see it come into a point where we have higher highs and higher lows, and then higher highs and higher lows, inside bars, inside bars. We get three of those coming into a little point, little pennant formation, and then we look for the breakout. So right now, all we're doing is just establishing a high and a low. This is the VWAP down here. It's called volume weighted average price. And I'm using the Heikin-Ashi bars. These are called Heikin-Ashi bars. And they're a little bit of a different bar than the normal traditional candlestick bar, because they're mathematically adjusted. If I turn the Heikin-Ashi bars off, that's what you get. That's kind of a normal bar. That's what most everybody else is looking at. Okay. So what we do is we turn on this Heikin-Ashi mathematical smoothing. It's still a Japanese candlestick. It's just a different model. And it gives you a little bit smoother trend. It kind of smooths out things so you can see the trends a little bit better. Kind of helps you know the color coding. I also like to use over here, when we come into the charts, we'll come into a longer term time frame. So this is now the 2-minute chart over here. And you'll notice that over here, I use a different indicator. I use what we call the bulls and bears. The bulls and bears is another mathematical model that kind of helps us identify Fibonacci and Elliott wave patterns. So once we get into the market a little bit more, we'll have a better view by looking at the 2-minute chart. This is my long-term chart. When I'm trading, momentum trading on the 1-minute chart, I like to look at the 2-minute chart as a longer term time frame, because the 1-minute chart gets kind of choppy sometimes. But the Heikin-Ashi bars, they help out with that, so it's not quite so choppy. But then we have, this is called the blue light system, which kind of helps us count the Elliott waves, because we know that we generally get three drive patterns, if you're familiar with Elliott wave. And then Fibonacci just measures those drives. So we try and calculate how big the drives are going to be, looking for mathematical reflections. So that's the 2-minute chart, and I just kind of flip back and forth between those. I don't have the ability to show both of those at the same time when I'm doing this live screen. So I have to kind of do them like this. And sometimes what I'll do is we'll come down and we'll go in and we'll do like this. I have it set up so I can see on the right hand side, I have the S&P 500 on the top, and then the S&P 2-minute on the left hand side. So if I only want to watch two markets, I can watch the Dow and the Dow 2-minute. So I see the Dow on the, now there, see that? See how that market's doing real nice over there with that little signal that we just mentioned. We talked about the little breakout, and that thing would probably fall, and we could have taken a short position there. That would have been a nice place to take a short position. All the other markets were falling, and so we were pretty confident that the Dow was going to fall too. Okay. So this is how I'll oftentimes run my charts, and then I have multiple screens and I can see all four charts. I can see the 1 minute chart and the 2 minute chart, and that's the way I like to see it. But then I like to see all four markets. So on the other screen, I'll have the two other charts. I'll have the Russell and the Nasdaq, and then the 2 minute charts, and then I can see all four charts at the same time with their 2 minute corresponding long term chart. But I can't do that when I'm broadcasting because I can't get that much on the screen. You guys are probably seeing a tiny screen even now as it is. So let's see what else. So John, you must be up in my age time frame. That's good. I generally appeal to the older generation. Um, you go to some of these other YouTube channels and they got lots of kids in there, and they're all yelling and screaming and having a good time and making fun of each other. And if you want that kind of thing, go there. They're fun. They're entertaining. But I'm a little bit older. I'm a little bit more calm, a little bit more reserved, a little bit more just try to teach guys. It's what I've been doing for 30 years is teaching trading, and this is new technology for me coming on here. I've been doing YouTube channels for, you know, 10 years or more, but I've never done the live stuff. And so it's fun to come and watch the markets live in the mornings with you guys and see how many people we can get in here to come and goof off with us and watch the markets and try and learn. And I'll show you how I do things. Again, I'm not here to tell you how you should trade. I'm here to tell you how I trade. And then you can decide if you can add that or if I've got any value that you can learn from. And we just come and hang out together. I'm going to go back to the four and we're going to watch the four. Okay, we're starting to establish a high and a low of the day. All right, so what I want to do now is I just kind of want to bracket those. I'm going to put a line at the top and a line at the bottom. And that's basically what we've got now. We've got a line at the top. We're going to draw that in here and a line at the bottom. So now we've established a basis. We haven't done that quite on the Russell yet. We need the Russell to bottom out. Looks like we're getting a bottom down here in the S&P. So that's our channel. Okay, so that's kind of where we're looking at the market, kind of whether we're going to break out of this channel and whether we're going to be a bullish market today or a bearish market today, and whether we can have a bias to the upside or the downside. The market's starting to calm down a little bit, so we can start taking trades once we start to get some setups and some signals. Again, I'm a pattern trader looking for a specific setup, and right now it's down here bouncing off the VWAP. A lot of guys will take this for an example. They'll take this bounce off the VWAP. They'll go long right here. Okay. The problem with just going off just some random line, and I call it random because if you look at the four other markets, they all travel basically the same, right? They kind of are the same, and they all either pay attention to the VWAP in their own way or they ignore it totally. And I'm not one of these guys that says if you draw enough lines on the chart, eventually one will get hit by the market and you can say your system worked. So it's just another random line. The reason it's important is because a lot of other people use it. And because these markets are so dynamically attached to each other, you'll notice that the VWAP over here on this market came in at a different place than it's coming in on this one, and a different place than this one, and a different place at this one. And so even though the markets are all doing basically the same thing and turn at the same point, the VWAP ends up in all these different weird places. Which one is actually paying any attention to the VWAP? Well, you tell me. People think it's important, so we watch it. It's just like a 200 period moving average or a 50 period moving average. Traders believe it's important, so we watch it. The more important one, in my opinion, is the average true range. And that's what the yellow dots are and the yellow arrows. Now, you can use those yellow dots and yellow arrows as buy sell signals if you want to. That's not really what they are. They're just telling you that the market has changed from bearish to bullish based on the average true range. The average true range of the market, the ATR, and then it says, okay, we're now bullish based on the average true range, or we're bearish on the average true range. So my strategy, what I like to do is I like to come in and say, okay, if the market is bullish based on the average true range, and I have the average true range just set to a setting of 1. So it's just an average true range of 1. Okay. So, and that works really well when you're using the Heikin-Ashi bars. If you turn off the Heikin-Ashi bars, that's not such a good setting. Trying to do ATR of 1 without the Heikin-Ashi bars, That's not your setting. Don't use one when you're not using the Heikin Ashi bars. That's my combination of what I like. I like to have the Heikin Ashi bars, the average true range of 1, and on the 2-minute chart, I'm using the bulls and bears, okay, and the blue light system to help me identify waves of the pattern and count the Elliott waves. All right, we're getting a little bounce off of here, off the Dow. I'm going to expect this market to hold right here and to start to rally once again. If it doesn't, we would expect it to break and fall once again. So it's coming in and it's holding that VWAP on the Dow, trying to decide if we want to put an order in or not right now. The NASDAQ is starting to run. We're getting a hesitation on the Dow. It's not as strong as I was hoping, starting to fail. So the S&P and the NASDAQ are starting to rise, but the Dow, not so much. Which one do we want to trade? We could take the S&P. The S&P looks like it's getting ready to break above the VWAP and above the average true range. We got a buy signal or a switch signal, right? We don't necessarily call it a buy signal, but on the S&P it says, hey, maybe we're going to go long here. But this could also just be a minor pullback on the way down. We could get this little, what I call a shelf. So you get this little shelf in here, and so it'll rally a little bit and then it'll break and turn and fall once again. So that's the problem with trading, is that for every time you think the market can go long, there's also a setup saying, hey, this could also go short. This could be a short play, a reversal. Same thing here. This is in a nice big downtrend. We just had a big downtrend. And now we've got this nice little pullback right in here. Is this going to turn and be a V recovery and just continue higher? Or is it going to fail and turn and start to fall once again on a longer term ABC pattern? I'm going to come in here and I'm going to assume this is going to be a little ABC pattern to the downside, and I missed it. So we're going to take it short right now. So we're short the market. We're going to anticipate this little shelf is going to break and the market's going to fall. We're taking a short position. See, we didn't take that long position off of the Dow as it started to look like it wanted to recover. This looks like just a little, what I call shelves, where the market goes up. And look at the Russell. The Russell's starting to fall. The S&P is starting to fall. The Dow's starting to fall. We're up $155 on a single contract. I don't have my trailing stop in here yet. And this is a nice little break. I call them shelves because the market comes down, it's bearish, it goes up, makes this little shelf, and then it drops. So now what we want to do is we want to just come in here. We're going to go add OCO. And in my OCO, I'm just going to set that. My goal is $500. So I'm going to just set it at $500. If I hit my goal, great. If I get stopped out before it hits my goal, that's okay too. I'll just take what it gives me and do another trade. But I'm going to wait very cautiously and very carefully. And I'm going to set this up, order. I'm going to say I want it to trail. And I'm just going to trail price bars back at this point, 1.1. 1.1 means one price bar and one minimum move. I don't like to go right one price bar because that it's got to accommodate the spread. Okay, see how my order is now dropping in all by itself? It's moving itself down into the location that we want it. And if our goal is $500, oh, it's backing off right now. If it starts to show weakness right here and starts to back off, I'll just get out and take the it's showing weakness. I'm going to take it right there. So we're at 415. So that's close. We didn't quite make our 500. If I would have let it go, it'd probably go down there and touch my 500. But it started to show weakness. I watched that little tiny chart up in the upper right-hand corner. We can always get back in if it pulls back. If it pulls back and starts to drop, we can always get back in. But we made $415 right there. We're $75 away from our goal. Now at this point, we have to decide, do I want to risk another 150 or 100 to make the $500? And so we're going to sit here and watch. There's no rush. Again, 1, 2, 3, 4, 5. I got 6 hours, and probably sometime between now and 6 hours, I'll get another perfect little setup like that. And I can pick up another couple $100 and be done for the day. Then if I want to go ahead and decide that I want to do more, I can do it again. And then what I'll do is I'll reset it and say, okay, now my goal is $250 and I'm going to risk $250 of my $500 to try and make a little bit more. Do it again. Do it again. Do it again. Do it again. You can do it as many times as you want, but at some point you have to decide that, hey, I've made enough or I've lost enough. And we're very conservative traders here. This is a learning class. We want to show profitability. We want to get green and we want to shut it down and stop trading and just do that every morning and just so that we can make $400 or $500 every day for a long period of time before we start getting crazy and going in with larger contract size, doubling up, tripling up, quadrupling up. Because if you would have got in with 3 contracts right there, you'd been up almost $1,000, right? So, but we're starting off with 1 contract because this is a beginner course. This is a beginner class. This is a beginner strategy. Beginner. We're beginners, all right? I've been doing this 30 years. I'm a beginner. All right? Matt asks, does the 14-day free trial include some training on how to use the software? Yes, it does. The software actually comes, if you come up to the help menu, you go in here, how-to videos, and it's got, let's see if it'll pop, where's it pop up at? Pops up into your browser. So Matt's asking about track and trade. Let's talk about track and trade a little bit. And so you've got all this education, all these videos that teach you how to use all the features and functionality of the software. There's all kinds of wonderful things in there. So this is functionality of how to, and in the process of learning about the software, you also learn, quite a bit about trading as well. So we kind of give examples of this is why this tool works, and this is how you use this tool, and this tool was designed to do this, and this is why you trade with this tool. So there's a little bit of training in there but mostly that's education on using the software. If you want to get education on how to trade, then I have courses over at tradementors.com, and Trade Mentors is where you can join my classes. In fact, I got something running for you right now, a really good something. Let me pull this up while we're talking about it. Right now, I have Pit News Magazine. Let me show you Pit News Magazine. Pit News Magazine is my magazine. It's a wonderful magazine. All right. Of course, I'm going to say that. I'm the one that I'm the editor in chief of Pit News Magazine. Look at this little market now. It's starting to rebound, and it's going to go up, and it's going to test that ATR once again. Let's wait and see if we get a setup in there that we can trade. But Pit News Magazine, I have a subscription to Pit News Magazine. Pit News Magazine has all kinds of wonderful articles in there about how to trade. That's what it is. It's mostly about trading strategies. It's a trading strategies magazine. So I teach you all kinds of trading strategies. Plus, of course, we've got all my buddies and friends and pals from the Chicago Board of Trade and the Mercantile Exchange and all my trading buddies and pals, all these guys. And plus, we go around, we find famous people in the industry who are great traders and want to write articles for you and teach you their strategies. Those are all put in there into Pit News Magazine. And the great thing about it is it's not just an article that you can read. They're like cheat sheets. They kind of show you specifically how to set up your charts, your software, show you how to do, different indicators and what they're important for. This month we had Dr. Scott Brown in there, who taught us about retirement and about when to take Social Security and why and all that. It's a really great article. And the great thing is most of the articles in there have audio along with them. We have audio that reads the article for you, so you don't have to read it. You can read along with it, or you can just listen to it like a podcast. So it's like, a magazine might come out with 5 or 6 articles, and 4 or 5 of them might have audio. So it's like an audio book version of the magazine. Plus, you get the written version, so you can always go back and reference it. Plus, it's got lots of diagrams. It's a great magazine. And we're running a special for you right now. So it's how to trade. It's going to teach you a lot of how to trade stuff. And we're running a special right now. You can get land. If you type land live $1, you get all the entire year, a whole 12 months for $1. I mean, that's like almost free, right? I mean, it's almost free anyway. A whole year of that kind of stuff where you're going to get all this audio, the video, the written, everything for $39.95 a year. It's crazy, but it's really cool. We love it, and we're trying to share our knowledge. And I think if you wanted to go over there and get that, that would be a great source and a great place to Learn to trade. Oh, look at this. That Dow came right off of that green marker. So there's three of them in a row. That's what we look for, right? So here's your three drive pattern. So let's come in here. This is an Elliott wave, just to give you a little idea of what we watch for. This is X right up here. This is the start. So one, that little green bar right in there came in with two. This is another one right here, the little green bars. There's three. Now we're coming down to the bottom. Okay, five. Now, where's it going to bottom out? We don't know, but then we'll start looking for the ABC pattern coming back up off the bottom. That's an Elliott wave. All right. It's a small Elliott wave drive, three drive pattern here in the Dow. It's a perfect little drive, three drive pattern. And you can trade those. That's what those are. Look, those little green spots are the spots where we want to get into the market and take our trades. So X, 1, 2, 3, 4, 5. So once we get down here, we'll look for it to bottom out, turn around, and rally, and probably come back up into the neutral zone, or up into this between those two green highs and lows of where we drew our our lows. We're actually in a bearish market right now. Oh, look, the Nasdaq is giving us another little shelf right there. While I was talking, we missed it. There's another little shelf, so it's dropping out the bottom. This is kind of nasty though, because it's going, looks like a little sideways to me. But that would have been a nice little trade right there off those green bars, taking that shelf. So here's another one up here, little shelf. This is what you look for. So when you're trading, watch for these little shelves. These little, make sure that you're in a downtrend, because you want it to have a yellow arrow pointing down, say that okay, the market has changed. We're bearish because the average true range, we're below the average true range. So then we want to take only sell positions, only short positions when the market is bearish. And then when the market is bullish, or when it changes and the yellow arrow is up, well, then we want to start looking for opportunities. These little pullbacks, these little red and green shelves is what I call them, little shelves. They're actually called flags. You know, we call it, the market is flagging, but they look like little shelves. So the market creates these little shelves, and then they break the shelf, and then they go up, they create a shelf, and they break the shelf. So as long as the market is showing us that we're bearish at this point, because we have a bearish arrow, we take the shelf to the downside. We don't take the shelf to the upside. Now, if it changes and goes the other direction, then we have to change our focus and we start taking shelves to the upside. All right. So subscribe to Pit News Magazine. That's where you're going to meet me over there. Plus, if you go to tradementors.com, I've got formal education, because I teach at Utah Tech University. I teach finance classes there. And so all those finance classes, I take those and I put them online for my professional students. So not just the university students, but my professional students can take those courses as well. And they're over there. And the first course, or the day trading course, you can get that when you sign up for Pit News Magazine. The day trading course is $500 if you want to take it online with me. And I help you one-on-one. We go through that course and I help you learn to trade, and we do a lot of this stuff. And the whole course is in there for $500. But when you subscribe to Pit News Magazine, it pops up and offers it to you for 99 bucks. So it's an upsell. It says, hey, you're subscribing to Pit News Magazine. You want to join our day trading class too. It's only $99 when you subscribe, rather than the $500 regularly. So you can either take it or not. It doesn't matter, but you can get the Pit News Magazine for $1 for a whole year, and then come and get your trading software. Go get Track and Trade. Install the demo, the trial. You got 2 weeks, and then I'm going to come and I'm going to try and do this I don't do it every day. So make sure that you subscribe to the channel and ring the bell. Make sure you ring the bell, because if you don't ring the bell, you won't know when I'm going to come live. I try to put out my live, like if I'm going to do live tomorrow morning, I'll create a live session today so that YouTube will kind of pop it up for you. But if you don't go and look, then you won't know. So it's ring the bell, so it'll send you a little notification that says, hey, Land's going to go live and talk about the markets tomorrow morning at 7:30. And then we could come here and get together. You can watch Pit News Magazine. You can stay in touch that way. You can stay in touch with me on YouTube. You can join the course over there at Trade Mentors and join that group if you want. A lot of the guys who write articles in Pit News Magazine are members of my President's Club. People who join the Trade Mentors stuff. So you get a lot of articles from traders who have been educated through the coursework. And that's always fun. It's always fun to watch what other students are writing about and seeing what they find important, and what they found important, and what they were able to learn and tell you about. I love it when the students write articles. Also, if you want to help this channel out, get more people in here, subscribe to Pit News Magazine. Oh, that's a subscribe. Let's see. I want you to leave a comment, help me grow this channel. Let's get more people in here. It's fun to have lots of people in here. But if you go over and leave a comment down, not just over here in our in the live chat, because that's always good. I love to have the live chat. Hello, Matt Baker. Let's throw Matt Baker up here. How you doing, Matt? What is the advanced technical analysis from Pit News? Oh, all kinds of stuff. That magazine's been printed for 20 years. So you can find all kinds of technical analysis, fundamental analysis, articles about different things. This issue, we have Doc Brown in there. He's featured on the front cover. There's, of course, a bunch of issues in lots of stuff in there. But Doc Brown wrote specifically this month about retirement. And he was talking about whether you should take your retirement. The Social Security talked about, Social Security going bankrupt. What's it, all kinds of stuff about Social Security. If you're getting up into your ages and you're worried about your Social Security, how it's going to work out for you, whether you should take it at 63 or 70 or older, or what all the advantages and disadvantages. He runs a bunch of scenarios for you. It's a really great article over there about what you should do with your Social Security. Also, Aidan Gray wrote a really wonderful article about why 80% of traders fail. And it's generally the reason 80% of traders fail is not because they don't know how to trade. They learn how to trade. What they do is they just give up because they have a couple of failures, and then they think, oh, I can't do this. I had a couple failures. I'm going to give up. And it's because they give up that they fail, not because they didn't know how to trade. It's because they kept trying to. And he talks about whether you should be trading one strategy and just wait for that strategy, or whether you should be trading a whole bunch of different strategies and trade different market conditions. I think it's easier, and I try to highlight in this example, in these trading scenarios, that we just pick one really good setup and just master it. And then once you get good at that and you find consistency, just waiting for that one setup. And what we're waiting for here today is we're waiting for these little shelves. All right, we're waiting for little bearish shelves or bullish shelves. We're waiting for the market to create these little shelves like this, and then we wait for the break. And that's the only thing we're going to do. We're not going to do all the other crazy things that you can do. Okay, we just want to watch for this one setup, and that's the easiest because it's the highest probability. And of course, I want the highest probability setup because I'm here in front of a live audience, and I don't want to look like a fool. So I want to do just the very best thing. And so if I can teach you just that one very best thing, and we can find consistency, and I can help you guys find consistency and show you that, hey, if you just master this one strategy and not a whole bunch of strategies, you can find consistency and you can get good at this, and you won't run into failure, and you won't give up. So don't give up is the biggest reason why people fail, is because they give up, because they're trying to do too many things at once. Take it slow, take it easy. Hey, we're up $400 today. We don't have to trade again. That's a lot of money. $400. If you were able to make $400 every day, that would be life-changing for many people. Life-changing for many people. This could be a supplemental income. If you get good at it, you do 2 or 3 more of these, it could be a full-time income. And you don't have to be crazy and in here and trading and taking a million trades and jumping in and out. Everybody thinks day trading is like, oh, you're supposed to come in and every little tick, yeah, let's be trading all the time, all the time. Well, brokers want you to do that. Sure, that's great for the broker, not great for you. You want to just come in here, wait and wait and wait. It's all about patience. Trading is like fishing, all right? Matt says he signed up for the Pit News, looking forward to the education. Wonderful. I'll meet you there. I'm going to help you. So it's going to give you a link to my calendar where you can get on with me and you can set up an appointment, and you and I are going to work one-on-one to make sure you get through that coursework. All right. I want to make sure that you succeed. I don't want failures. I'm here to help you guys succeed. Simple, take it easy. Don't be crazy. I know you can go to other YouTube channels and they're going to tell you, look, I made $1 million in 13 seconds. It only take me 12 minutes to make $12,000 in 12 seconds. Okay, great. Someday you might get there. You might be able to do that someday. But right now, in the beginning, let's take it slow. Let's take it easy. Trading is like fishing. We wait and we wait and we wait. We find the perfect setup. We throw our line in the water and we see if we catch a fish. Sometimes we catch a big fish. Sometimes we catch a little fish. Sometimes we get our bait taken. All right. That's part of fishing. Sometimes you lose your whole line. You ever been fishing and got a snag and had to break your line? Well, sometimes we break our line. We have a bad day when it comes to trading. But if we wait and we're patient and we look for markets that are moving and trending and have these nice little shelves that we can trade, trading is easy when the market's performing properly. And you can wait and see when it's performing properly. When it starts going sideways, look, the S&P started to do nothing. It's just going dead sideways now. It's not really trending. So we don't want to take any trades right now. We want to be very careful. We want to make sure the market's making a nice move, and then we expect that I like short positions because the market has a tendency to fall faster than it rises. Thanks, Matt. I'll see you in class. I'm going to help you. All right, I'll help you. Matt Baker says is not even in the chat room on YouTube. He might have it hidden. Haha, you are posting pre-made pictures. Yeah, John Doe. Maybe your pre-made picture too. I don't know. Matt Baker is not even in the chat room on YouTube. I don't know. I don't have the ability to answer that myself. What is advanced technical analysis? Advanced technical analysis from Pit News. Thank you. Matt Baker. What is the advanced technical? I don't know. Whether he's in there, I don't know. I don't know. I thought he was real. Anyway, whether he's there or not, if you guys would join me by going in and writing in the comments. I don't have the ability to put that in there. I don't have the ability to go in to put a fake Matt Baker in there. They don't give me that ability over here in the software. I'm using StreamYard. StreamYard doesn't let me do that. So anyway, I thought he was real. I think he's real. We'll go look after the class. I'll go see if he's subscribed. Subscribe to Pit News. All right, let's get back to the markets. Go down and write a comment in the comments under the. That'll help get YouTube going on this channel. Get more people in here. Okay, look at the Russell. That kind of threw me. That guy's fake. I don't want fake people in here. Let's see if we can find another opportunity before we call it quits. We're at $415. We haven't quite hit our $500 goal. Matt says he's here. He goes, I'm here. What are you guys talking about? YouTube is doing strange, maybe. I don't know. I hope you're real, Matt. I hope that we're not getting trolls. I'll see you in class if you are. I'll see you. I don't know. Okay, let's watch the markets. That's more interesting anyway. See if there's not something else we can learn here. All right, we're coming back up here with the Dow, and we're bouncing off that VWAP. But notice the VWAP on the Dow, and yet all these markets kind of move the same. The VWAP is nowhere near having any effect on the NASDAQ. It's not there. It is on the Russell, but the Russell just ignored it and went right through it. Didn't bounce off of it. Didn't do nothing. That's kind of the misnomer about the VWAP. The VWAP, people put a lot of importance on it. They think that's a really important line on the screen. So we have to watch and see, because a lot of guys only watch one market. They only watch the Dow, and they're myopically focused on the Dow, so they don't have any idea what the Nasdaq, the Russell, and the S&P are doing, and how they're affected by the VWAP. It's one of those things we have to be aware of it because other people think it's important. It's like the 200 period moving average. We have to put that on there. 100 period, 50 movement period, simple moving average. We have to be aware of it because other traders think that it's important. We also have to be aware of things like the 21 period moving exponential moving average because people think that's important. The 9 period moving average. We have to pay attention to that because people think that's important. Why do they think it's important? Because there's traders who tell you it's important. And so those traders follow those people. And so you have a group of traders who think that is important. And so because they react to it, it reacts to the market. So you have to kind of be conscious of a lot of these other different popular strategies. Indicators are the same way. Sometimes you have stochastics, you have MACD, you have CCI, you have RSI, you have all these different indicators. And if you put them all on the screen at the same time, most of them will give you signals almost on top of each other. And so because of that, because of a lot of traders use indicators, a lot of traders have those effects on the indicators. Okay, now I want to show you something. Look at the S&P. It's falling behind. The Nasdaq is falling behind. Look at the Dow has made a nice big long green recovery. Look at the Russell. Nice, beautiful recovery. The S&P is starting to recover, but look at the lagger. Who's the lagger? It's the Nasdaq. The lagger. Is the lagger going to fall behind? Is it all these other markets are starting to rally? So we could take a long position here, take a very cautious long position here on the Nasdaq and anticipate that it's going to rise in price like the other markets. We don't have to make much to get our $500 goal, but we do have to risk a bit. We're going to have to risk some. So we're going to come in here and our $500 goal, we only need 75 bucks. So we come in here and we put that in there, 70. Can't quite get 75. It's too small. There we go. Okay, we just broke 500. There's $530. We're over $500. And the reason we were able to take that trade and the reason that worked for us is because we saw that the Nasdaq was lagging behind the Dow. It was lagging behind the S&P. It was lagging behind the Russell. It was the slow one. So the chances of it actually falling in price while all the other indexes are rising in price, pretty low probability, right? So if all the other indexes are going, this one hasn't gone yet, it's probably not going to fall. And that's what we're mostly worried about, right? As traders, we don't want to get into a market the wrong direction. So if we can get kind of a little bit of a trigger point saying, hey, this market is probably not going to fall. At least we're not going to take a big loss or a huge loss, right? And it's probably going to rise because all the rest are rising. Trade the lagger, trade the one that follows behind. So we're up over $500 and we've met our goal for the day. And hopefully you guys will join us at Pit News Magazine. Matt, I hope you're real. And if you are, meet me online and we'll work together to get you through that course. And we'll help you do this for yourself. All right. And I always like to end with a lesson. So we're going to go through just for real quick. I'll pull up my little lesson here. And all right. Let's turn this thing off, this little banner, so we can see. This is my little joke here. It says, don't let personal opinions get in the way of making money. All right. So not my bull market. Yeah, he hates Trump. This was a older, during the Trump train. Remember when we had the Trump train? Not my bull market. I hate Trump, so I'm not going to make money. Don't let your personal opinions and your politics get in the way of making money. Look at this Russell. Man alive, what a beautiful trend that thing has. Okay. Look at the Nasdaq. Good thing we just popped in and took our profits because it's kind of not doing much right now. It's not really following as well as we had hoped on these other markets, but we took our pennies out of there and made our $500 goal today. And don't let your personal opinions get in the way of making money. And we'll catch you. I'm going to try and do this again tomorrow. So make sure you ring the bell, leave a comment down in the comment section. Just say hi. It helps the algorithm point this out to more people. Says, hey, this is important. People are engaging with it. Hit the like button, and we'll see you tomorrow.